Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are up 1.3%, close to 1.3%. Currently the market is closed. On the 1 hour chart we do see the 1 hour MACD is heading positive and we have near overbought our side. On the 4 hour chart we are still on negative MACD. Most likely we're going to head to positive MACD very soon. And on the daily chart, we see a convergence on the daily MACD. So that is a positive sign that we may see higher prices in the next coming days. And we also start to see a curve, an upward curve of the 9-day moving average, which is also another positive sign for the longs or the bulls. So right now I do see a possible resistance around the price of $11.55. Reason why, we have the 50-day moving average and 100-day moving average coinciding that price range. And if we expand out that price also, there's a concentration around that level as well. So I'll mark that as our immediate resistance. So we do see that in the near future. And as for support, we do have possible support where we left off back in October 3rd. That is another support that also coincides with August 7th support and also June as well. That will be our next support if we do head down lower. So if we were to move on higher, that price movement is roughly around 2.5% to the upside. However, if we move down lower, that price movement is close to 4% to the downside. So let's head to the forecast model. On here, I should say this forecast model is now available in the link below, so check it out. So on here, I'll go day by day where WTI crude oil will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and below it is the trend that I believe is the best match. So let me point out why these two charts are similar. So while we have in the current trend, we start off in the middle Bollinger Band, and we proceeded to touch the bottom Bollinger Band next. After touching the bottom Bollinger Band, we made a nice reversal to touch the upper Bollinger Band. After that, we see the price decline and touch the bottom Bollinger Band once more. So we see those points on the current trend. So back down to the trend in question, let's just mark all the instances where it touches the bottom Bollinger Band. So we have one near the beginning and one right towards the end. We start off at the middle Bollinger Band, and this will be blue, and then we're missing where it touches the upper Bollinger Band. So we have that point, that very last point. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the trend that we just examined was June 9th to September 2nd, 2010. So back then, WTI crude oil was up roughly 1.4%. So I do expect WTI crude oil to head on higher. And again, this forecast model is now available in the link below, so check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.